morning and welcome to PwC's Boardroom Forum Live. I'm Saleeha Moolla and I'm a Senior Manager in PwC's Corporate Reporting Services. Ronel Fourie will be joining me in conversation today. Ronel is a partner in PwC's Corporate Reporting Services, a retail industry specialist, and an IFRS for SMEs expert. Ronel will be sharing her insights today on the latest amendments and developments on the new IFRS for SMEs amendments. Welcome, Ronel.
Thanks for having me, Saleeha.
IFRS for SMEs is the accounting standard that impacts the small to medium-sized entities, and these would typically be those entities without public accountability. Now, earlier this year, the third edition of this standard has been issued to reflect some of the changes that took place as a result of the full IFRS amendments. However, still maintaining simplicity of this SME standard. Maybe to you, Ronel, why was there a need to update and provide these amendments in terms of the IFRS for SME standard?
Thanks, Saleeha, for that question. Definitely an interesting sequence of events. So when the board issued the standard initially, they said there'd be a revision of the standard every 3 years. Now, it's been quite a bit of time since the standard was issued originally. As you may remember, it was issued in 2009. That was our first version. The second amendment was issued in 2017. So quite a bit more, longer time than 3 years. So keeping up with the amendments in IFRS, in full IFRS, as you've mentioned, they've now taken some of those into account and issued the third edition. Now, in order for the board to assess whether the full amendments need to be taken into account in IFRS for SMEs, they've set themselves 3 objectives. So firstly, they ask, is it relevant to SMEs? So for example, segment reporting wouldn't be relevant because these entities are not listed. Secondly, they ask if it is still simplified. Is it simplified enough to allow SMEs to apply the given amendment? And thirdly, there still has to be faithful representation. So the financials are still general purpose financial statements.
Okay, that's interesting. And I guess the standard has remained quite stable considering some of the amendments and frequency of amendments in terms of the full IFRS standard. So when are these amendments then effective to issuers?
So the amendments are effective from the 1st of January 2027. So if you have a December year-end, for example, you'll first apply the amendments to your December 2027 year-end, but with consideration of how it impacts your 26 comparatives.
Okay, so I guess although there is a bit of time until the actual effective date, issuers do need to start thinking about this now already, right? I don't think they could wait until 2027 to start thinking about these amendments and what they mean to them. Maybe moving on then, what are some of the significant changes to the IFRS for SME standard now?
Yeah, definitely. I completely agree with you that you can't wait for 2026, 2027. You have to start familiarizing yourself with the new concepts. So just to call out a number of the bigger changes, for example, control as a principle has been aligned with full IFRS. So under IFRS for SMEs, we were still very much focusing on a risk and rewards type model. And this has now been updated to a control model. So when a party has power over variable considerations and the variable returns from an entity, that is in essence when it controls. So that concept might result in some changes in accounting. Secondly, there's been some updates to the definition of a business combination to align with full IFRS. Similarly, in business combinations, there's been more guidance added around contingent consideration. And also when you lose control, there's some nuances in how you might account for a retained interest. So those are the ones to maybe call out on the balance sheet. What else, if I can think about some of the other key changes? Financial instruments has been aligned broadly to IFRS 9. Now, the key change here is that entities in the past had a fallback to full IFRS and IAS 39 specifically for financial instruments if they chose to do so. Now that fallback to full IFRS has been taken away. So you have to fully comply with IFRS for SMEs and all its principles. And there they've consolidated the two sections into one section. So you'll probably know what I talk about if you're familiar with the framework. There was a simplified section and a more complex section. So those two have been combined. They've also consolidated all of the guidance around fair value measurement into one section. So that's very similar to the guidance we have in IFRS 13, fair value measurements in full IFRS. So we now have a section 12, which deals only with fair value measurement as well in IFRS for SMEs. Yeah, so those are some of the key changes, maybe from a balance sheet perspective, to add on financial instruments. Another one that's been aligned, or another principle that's been aligned, is around revenue recognition. Now, the old revenue recognition guidance has really been dated because of the complexity of how entities do business. So you don't anymore only buy a good, you buy a good plus a maintenance contract plus a service added on. So this complexity was really difficult to deal with the limited guidance in IFRS and then IFRS for SMEs. So the revenue section has now been aligned with the principles of IFRS 15 and full IFRS. Yeah, so a lot to deal with from a change perspective. And maybe to reiterate what you said, a lot to deal with, so don't wait till 2027.
Yeah, sure. That is quite a few changes that have come through, and I think it's quite a good attempt to catch up to the full IFRS and those amendments that's been taking place. So we've talked about what's changed. What hasn't changed with regard to the IFRS for SME standard?
One of the standards that recently changed in full IFRS is the leases standard. So there, if you have an operating lease, you have to account for a right of use assets and a lease liability. That created a whole lot of change within entities because there are so many entities with lease financing for their assets. Now, the board said it's too soon to add that also onto SMEs. So they'll re-look at the leases standard, and perhaps in 3 to 5 years' time, we'll see that come into the SMEs, but for now it's been left out. In the case of maybe simplicity, or the principle of simplicity, there was a lot of debate around whether SMEs should apply the expected credit loss method when they look at their debtors or their trade receivables. Well, luckily there, they listened to the feedback from preparers and they decided to stick to the incurred loss model. So what does that mean? You would only provide for your debtors if you know they're bad or they're in trouble. You don't have to add complex forward-looking information into mathematical models. So there's some good news on what's been left out.
Okay, no, definitely some good news for issuers. So I guess considering what has changed and what hasn't changed, what does this actually mean for issuers now that are adopting the IFRS for SME standard?
So the entities who are adopting IFRS for SMEs and the amendment now really have to focus on the transition provisions, because similar to other standards, there's a whole host of transition provisions to simplify your transition onto the amended standard. So some of these transitional provisions, for example, allow you to account or change the accounting prospectively. So you don't have to go back and redo old revenue contracts or long-term contracts that are still running. You can look at your contracts going forward. You don't have to go back and redo business combinations. You can look at your business combinations going forward from the date you adopt the amendment. So there's not only getting used to the new principles, there's also understanding how to transition. So those two elements companies need to deal with in their path to adopting the new amended standard.
Thanks for that, Ronel. So there are quite a few transition reliefs that are provided. So although it's a simplified standard and approach that can be applied, it may not be as simple to actually adopt these amendments, and entities do need to give it some careful consideration. Now, if we think back to a previous boardroom forum session around IFRS 19, which is the standard that deals with disclosures that relate to subsidiaries without public accountability. Now, with SME adopters, they also do not have public accountability. Can you maybe just help us with the difference between IFRS 19 and the IFRS for SME standard? And how can an entity decide which standard would be best for them to adopt and apply?
Yeah, so I can see how that could be a complex decision to make. Now, IFRS 19, which was brought into the suite of full IFRS standards, as its name says rightly, is a simplified disclosure standard with exactly the same measurement as full IFRS. So recognition and measurement is the same, but disclosure is simplified. Now, if you're a subsidiary, specifically a significant subsidiary of a listed group, there's no need in your separates to do the full disclosure that the group might need to do. So then it would be easy to apply IFRS 19 and do reduced disclosure in your own statutory sets of accounts. You might, however, have to do some additional disclosure, or some data points might be in your reporting pack, but it's not in your full statutory set. For IFRS for SME preparers, measurement and recognition might actually be different from full IFRS. So if you're a subsidiary of a listed group and you apply IFRS for SMEs, you almost have to keep two sets of accounts, one full IFRS set for group reporting and IFRS for SMEs for your statutory set, which is very onerous. If you're not a listed entity or part of a listed group, by all means, IFRS for SMEs is a more stable set of framework. Changes are less frequent. As you see, the last changes were in 2017. They're well thought through. I suppose we have so much experience in the adoption of these standards in full IFRS, and those learnings we can apply to IFRS for SME entities. And you have, in most cases, less disclosure. So really a win for entities who don't have public accountability.
Okay, so I guess it just depends on the entity itself and its group structure in order to make that decision around the best framework for them. So now, what are some of the resources available if we want to read further?
So the ISB, Saleeha, are really doing a lot to put resources out for small and medium-sized entities. They're working through these amendments to actually do an illustrative set. So we're waiting to see that illustrative set. And there'll be also educational material coming from the ISB itself. Internally, PwC is also doing some thought leadership around similarities and differences, tips and tricks in transition. So watch out for those. We'll definitely put them on our social media platforms as soon as they're available.
So that brings us to the end of the session. We've talked about a lot, and there is surely quite a bit to consider when adopting the new amendments under the IFRS for SME standard. Thank you, Ronel, for sharing your insights with us today. And thank you all for listening in. Join us for our next episode of the PwC Boardroom Forum Live, where we'll be discussing some of the sustainability reporting updates.